Welcome back to Dividend Obsession. I recently started a series on my channel called Dividend Discussion that's going to allow other dividend investors to tell their story. One of the goals of this series is to allow each of us to grow through the experiences and lessons of others to make us all better dividend investors. Now, if you're watching this video, this is just a short clip from the full interview. So if you enjoy it, make sure you click on the link at the end of this video for the full interview.
Yeah, because when you look at the actual numbers, if you're like 5% yield, I was just kind of looking at, how quickly do you get to, $100 a month? 5% yield is maybe 2 years. If you go up to 15% yield, click over here, then potentially you could get up to $100 a month in just 9 months. If you go up to 20% yield, goes up to or down to 7 months. You're like 40% yield, it goes up pretty quickly. Within 3 years, you can get, $1,000 a month in income. That's assuming that, the stock price stays the same, the dividend itself stays the same, and, the yield stays the same.
Yeah, and they're able to pay that 40% yield for 3 years. Yep.
Right. But, the thing that, you end up coming across is that those, higher yields tend to be unsustainable most of the time. I mean, there's a few kind of corner case exceptions, like ABR, where you can get like a 10%, 11% yield, and the dividend itself seems to continue to grow over time. But that one's not at the like 20%, 40% yield.
Yeah, that was actually in one of my not most recent, but one of my pretty recent, like maybe 2 or 3 Fridays ago. That was the highest dividend yield, and that was, most of the time on those Power 5, I don't want to do a lot of filtering. Like I want to kind of let the numbers speak for themselves. So the only thing I do is I make sure that it pays for 5 years or more and pays and grows, and it also beats the market. Then everything else is fair game. If you're the highest yielder, you're the highest yielder, whatever. But typically when you start adding that beats the market, like outperforms the S&P 500, I see all the higher yields. They just fall off because it is, that here's $1 today in lieu of $1 tomorrow. Or I guess $1 today in lieu of $10 next year. Like that's more or less what it is. And ABR, actually, I was very surprised. It was like a 13% yield. I was like, wow, that's a really high yield. It outperformed the market, grew its dividend for more than 5 years in a row. I was like, hey, I mean, those videos aren't intended to be like, hey, here's 5 stocks you got to buy. It's just like, hey, if you're into any of these kind of categories, here might be one that you can research over the weekend. And if you like it, you buy it like Monday of the following week, which obviously we have Memorial Day coming up. But you buy it Monday the following week, and it goes ex-dividend the following week. So that means you'll get in before the ex-dividend. You can get that next dividend too. So that's just a little cherry on top. But yeah, ABR seems to be, I mean, from the very little research I've done on it, that one seems to be one of the higher yields that actually seems to be of somewhat quality. So
yeah, that one's on a few of my watch lists for various reasons.
Yeah.
But yeah, it's the 10-year performance on it's just been phenomenal.
When you have, so like, yeah, it's using your criteria. And like I said, nobody's criteria is right or wrong. It's whatever they understand and stuff like that. And then it's also understanding your timeline when you need the money. There was a post this morning on the group that I think it was this morning or last night, where a guy, took a screenshot of his portfolio and he was just like, how do I make more money in dividends? And, everybody was just like, invest more money, whatever. And I, put one word answer and then followed it with a little bit of an explanation or more of a question. And I said, first thing you got to do is like, you need time. Like time is what makes your dividends grow. Obviously capital, but time also. And then also like, I asked him the question of like, when do you need the money? Cause so often people, especially that are new in the space, they judge how successful or smart somebody is in the dividend world by what they make in dividends, not realizing that like for my stocks, when they go down, I have plenty of time. If they go down, to me, that's a buying opportunity. I don't need the money for years and years and years. So I don't care if my stock price goes down today because I don't care what it's valued at today. For me, Microsoft goes down 20%. Great. I'm buying 20% more with the same amount of money. Perfect for me. But it's also the yield. Like I try to get my yield to grow exponentially year over year over year. But not my yield, more or less my income from my stocks to grow exponentially year over year. But like, I also don't necessarily care what I'm making in year 1 of 22 or year 5 or year 10 of 22. I just need, by the time I get to year 22, I need that money to be able to supplement my income or really be my income for my early retirement. So like, that's really important for you too. So if you get that criteria down where you're like, hey, I want my stocks to meet these 1, 2, 3, 4, 5, whatever, however many are on your checklist, meet those things, and then also understand I don't need this money today. I'm not smart or stupid because of how much money I make today. It doesn't matter what I make today. My goal is to get a foundation that I can build my dividends off of for years to come, decades to come. I really hope you all enjoyed that clip. Please make sure you guys leave a like on the video as it helps me grow my channel. And don't forget to subscribe for dividend related content and other interviews. If you're interested in being added to the interview list, send me an email at dividendobsession@gmail.com and I'll be in touch. Again, this was just a short clip of the full interview. If you're interested in the full interview, check that out right here. But until next time, see ya.